So we just got this update. Full year 2022 earnings. Amazing from NatWest. Up significantly. What is that? It's like 50%. Earnings per share about 50%. Is that 50%? It's like close to 50%. It's crazy. Revenue up 7%. Net income up 35%. Profit margin up like 40%. Net interest margin, which is higher. Cost to income ratio, so that the costs are going down. Non-performing loans are actually down. That's incredible. Maybe that's a bit early to say, but this is very interesting. Very, very interesting. I did write a video, produce a video rather, recently saying that I thought that it could go either way with NatWest. Let's have a look at how their shares are doing. I actually haven't had a look this morning, but let's have a look if they've reacted well. No, they've actually gone down, interestingly enough. But I do think it is, what happened here? 320 to 28, they've gone down quite a bit. That's really interesting, because I was talking about them in October. They've actually fallen about 8% in the last week or two, which is fascinating. I wonder why. It looks like some people have lowered their target. So look at this. The shares go down despite an £800 million share buyback. By the way, a share buyback is one of the biggest signs that a company is going to do very well. It's one of the biggest signals of fast growers, because there's reasons for this that I don't want to go into, but just to summarize, there's less shares in circulation, dividend yields go up, and it shows that the business is doing very well. So, I mean, look at this. The profit is up so much. It's up from 3.8 to 5 billion. I mean, that is just mad. The PE ratio has gone down to 7. Earnings growth was 60%, 59%. It's just mad. The PEG, which is the price to growth ratio, price to earnings growth ratio, is so low at 0.1. Now, there is risk with NatWest. That default ratio may go up in the next few years, the loan default ratio. They've got a dividend of nearly 5%. The PE is very low. The earnings are going up. I think it's very interesting. And, look, they had special dividends as well. They had special dividends last year. So that's very interesting. You get a 10p dividend, and you may get a special dividend this year as well, potentially. There was a special dividend last year, and earnings are up massively. So if you got let's say you got 27, 28p in dividends, you're getting 10% dividend from NatWest. That's if you get a special dividend this year. If you don't get a special and you just get the 10, you're still getting nearly 5%. So I think that's really interesting. I think if one is interested or knows about options, I think this is an interesting options play. Like I said, I think the straddle is still on. What that means is buying a call option, just in case they go to like 320, 330, you get that upside. And buying a put option, just in case their loan and bad debts increase and they fall to like 250. You got yourself covered. Either way, it's a nice way to hedge. I really don't see NatWest staying at this level at like 280 for like the next 3 years, or even the next year. That's why it'd be interesting to get a call option and a put option. Right now, I can't necessarily put on options myself. Obviously, I can't advise anyone on what to do, but I do think it's interesting to look at different companies. I used to work for NatWest for a bit. So yeah, I hope you've enjoyed this. I do have other videos about listed equities, otherwise known as stocks. And of course, angel investing, of which I've invested in over 80 companies. Hope you enjoy these videos. If you do, like and subscribe. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video. Take care. Remember to subscribe as well.